Do you all know the top 3 mistakes which wealthy people do? If you have built 100 crores fortune today, what are the chances your grandchildren will still enjoy it? If your business stopped generating income tomorrow, how long could your family continue living the same lifestyle? Create what I call as a family financial map. The decisions you make now about holding structures, joint accounts, trust frameworks, insurance, all of these shape the outcome. If there is one message I would like you to remember, it is this. Hi, I am Kunjan Gupta, founder and chief wealth manager at Client First Alpha. For more than 20 years, I have helped entrepreneurs, professionals, and business families grow their wealth and protect their legacies. After 20 years advising wealthy families, these are the 3 costliest mistakes I keep seeing. Let me ask you a question. If you built a 100 crore fortune today, what are the chances your grandchildren will still enjoy it? Unfortunately, not very high. The study shows that nearly 70% of the family wealth disappears by the second generation and almost 90% disappears by the third generation. The surprising part, this usually has nothing to do with bad markets, poor investments, inflation or taxes. It happens because of 3 expensive mistakes that even highly successful families unknowingly make. And after working with business owners and wealthy families for over 2 decades, I have seen that these same mistakes appear again and again. Let's talk about the 3 mistakes that silently destroys family wealth. Mistake number 1. Confusing income with wealth. I met a businessman in his mid-50s. Successful company, strong profits, excellent market positioning. By every measure, he had achieved financial success. I asked him just one question. If your business stopped generating income tomorrow, how long could your family income living the same lifestyle? And he thought for a moment and he replied back, maybe 2 years, 3 years at most. The answers tell us everything. For 15 years, he had earned crores, but his family's financial independence was only 3 years long. That is because of income. It's not wealth. Income is what you earn. Wealth is what continues working when you stop working. Too many successful people use income to upgrade their lifestyle. A bigger house, a better car, more business expansion. Very little of that income gets converted into productive assets that can support the family independently. So they are building a lifestyle, not lasting wealth. The solution is simple. Treat wealth creation as a non-negotiable priority. Before lifestyle, before luxury, before everything else. Every month, systematically convert part of your income into long-term wealth producing assets. Income gives you comfort. Wealth gives you family freedom. Mistake number 2, becoming the single point of failure. The second mistake is deeply rooted in many Indian families due to our culture. One person manages everything: bank accounts, investments, insurance, property documents, business finances, everything being handled by one person. Usually in the family, it is a family head or husband, elder brother or elder son. And without realizing it, that one person becomes the single point of failure for the entire family. A businessman I know suffered a sudden heart attack while traveling. He was very healthy before that. Thankfully, he recovered. But during those few weeks in hospital, his wife discovered something frightening. She did not know where the investments were, which banks they used, who the nominees were, whether there was a will. She had to literally call the CA, the lawyer, the banker, the investment advisor. Everyone knew a part of the story. Nobody knew the complete picture. And it took weeks just to understand her own family's finances. The lady was not uneducated nor unintelligent. She had simply never been included in the financial conversation in the family. And the cost of that exclusion, when the moment came, was immeasurable. I want to be very direct here. Financial secrecy within a family is not protection. It is a big risk that sits silently in the background of every single day and reveals itself only in a crisis when you are least equipped to deal with it. Now, to solve this, there are 3 concrete steps which you can do in your family, and they do not require you to change how you manage money. They simply require you to document and share what already exists. First, create what I call family financial map. A single document that lists every bank account, every investment, every insurance policy, every property, every loan, who holds it, what the account numbers are, where the documents are kept, the name and contact of every advisor involved. This document does not need to be a legal instrument. It just needs to exist, be accurate, and it should be accessible to your spouse. Secondly, have the conversation, sit with your spouse or your close family relatives and walk them through your finances. Not in one meeting, not to overwhelm them, but in stages. Over a few months, make sure they know where things are. Make sure they can access what they need without relying on someone outside the family to piece it together under pressure. Third, and very importantly, update every nomination in timely manner. Suppose your father is listed as a nominee on one account from last 20 years and your father is no longer alive. That asset will go into legal uncertainty when you die. Review every nomination, update them. Do it this year as a priority. Create a family financial map listing every important financial assets and document. Review every nominations regularly, and most importantly, make sure your spouse and the next generation know enough to manage things if life suddenly changes. The mistake number 3, no succession plan. The third mistake is perhaps the most expensive because it is also the most preventable. I meet business owners in their 60s, the people who have spent 30 or 40 years building their businesses, building their wealth, building their families. And I ask them one question: if something happens to you tomorrow, what happens next? The most common answer is not a plan. I hear it is an intention. They say, I will sort it out soon, but somehow soon never comes. Without a valid will, the law decides how your assets are distributed and not you. Without a business succession plan, the company you have spent your lifetime building can lose value very quickly. Leadership becomes uncertain. Key people may leave. Decisions get delayed. And the business you wanted to leave as a legacy may become a liability. Now the point here is, none of this is inevitable. Yet all of it is preventable. By following 3 non-negotiable actions. First, write a will, not a mental note, not an intention. A properly drafted, legally valid will, prepared with a qualified lawyer. If you already have one, ask yourself, when was it last updated? Your assets, your family, and your wishes change over time, and your will should too. Second is, create a written business succession plan. Who takes over? Family or professional management, or you would like to sell the business in future? These are the conversations that feel uncomfortable when everything is going well, but they feel catastrophic when they have to happen without a plan. Third, and the most important one, is work with both a wealth manager and estate planning lawyer. Investment planning and estate planning are not separate conversation. They are one integrated strategy. How your assets are owned, titled, and structured today determines what your family receives tomorrow. The decisions you make now about holding structures, joint accounts, trust frameworks, insurance, all of these shape the outcome. If there is one message I would like you to remember, it is this: the first generation creates wealth, the second generation enjoys it, the third generation often loses it. But that does not have to be your family's story. Avoid these three mistakes. Don't confuse income with wealth. Don't become the single point of failure, and don't postpone succession planning, because your greatest legacy is not the money you leave behind. It is the financial security, family harmony, and opportunities your loved ones continue to enjoy because of the decisions you make today. Thank you for watching.